We think the best positioning now is to be long U.S. economic risk tied to securities that are dependent upon consumer credit not deteriorating dramatically. So very simplistically, we have quite a bit of exposure tied to the U.S. housing market, also tied to multifamily commercial real estate. Both of those are very dependent on the consumer not having big problems. The consumer can slow down, consumer growth can be more modest, but what we can't have is a dramatic deterioration like we did in 2008. Fortunately right now, as most of our readers and viewers know, the U.S. consumer is doing exceptionally well, the U.S. economy is strong, and when we see the next slowdown coming, we think it's going to be principally around CapEx and inventory liquidation, and we think very similar to 2002, the consumer will still do relatively well. So we think this is the best way to be positioned. Long economic risk tied particularly to the U.S. consumer, where really all you need to make a reasonable return is not having a recession. And additionally, a large amount of our exposure is tied to floating rate securities, and as the Fed has been hiking, our cash flows have improved. Another area we have significant risk in is tied to regional and community banks, which have benefited from a tremendous regulatory tailwind, also from tighter Fed policy. But the last note there that some are not aware of is that close to 50% of bank lending exposure of regional community banks is again tied to the U.S. consumer. The next largest exposure is only 17%, which are commercial industrial loans, and after that it's 16% to commercial real estate. So it's not that we're all in on the consumer, but this is, we think, the best positioning one can have if you have a degree of confidence that in the next recession, which we don't expect anytime soon, but even when that occurs, the consumer state shall still be relatively strong relative to corporate America.
All investments are subject to risk, including the possible loss of the money you invest. For more information about SkyBridge Multi-Advisor Hedge Fund Portfolios Series G and the SkyBridge G2 Fund, call 1-888-759-2730 to obtain a prospectus. Investment objectives, risks, charges, expenses, and other important information about a fund are contained in the prospectus. Read and consider it carefully before investing. This webcast is for educational purposes only. We recommend that you consult a professional advisor about your individual situation.